This is an Ask Slim special presentation. Go to AskSlim.com to learn about our charts and analysis, educational trading videos, trader coaching, and hedge fund consulting.
FutureSpeak, July 13th, 2016. If there's a big difference in the markets between last week when we did this video, FutureSpeak, and this week, it's that there's been a bit of a change in what I would call flow of money. Money is now apparently moving out of bonds, even though we have an uptick in the bond market today, and into stocks. That's typical because the S&P 500 has moved to a new high, and bonds have had a huge rally. That part of it may be atypical because to have bonds at these record levels and then the stock market making an all-time high, you're not going to find a lot of times in history when you see that. So one of them is out of whack, and I think that investors, fund managers, are seeing that they have a ton of money in bonds parked there as a flight to safety, safe haven, and the stock market's moving to new highs. So they almost have no choice but to move money out of bonds and into stocks because they're underinvested in stocks and they're overinvested in bonds. So that means that the stock market probably still has more to go. I know a lot of people that are kind of selling the highs and thinking, well, they can't go up another day, can they? Well, they can actually, and when you get into this mode, we could see money flowing into stocks for a while. Now, that doesn't mean there won't be dips, and there won't be days when the bond market ticks up, but I think we're going to see this tone change of money flowing out of the bond market and into the stock market last for, well, at least a little while, some number of weeks. So we're going to look at light crude, foreign exchange, the metals market, treasuries, the stock index futures, and also the grains and coffee. One note before I get to stock index futures, some people have asked, why do I do the cash indexes versus doing the futures in the stock index futures? The reason I do that is because it gives me a lot more consistency in the charts. Every time there's a roll in the index futures, there's a big discount, and then they spend the rest of the quarter reducing that amount of discount until they're essentially at parity near expiration. What that does is it skews the charts in the futures, and I'd rather just have the perfect charts with the perfect numbers in the cash. So that's why I do that. You can just correlate it to the futures and the analysis when when you're looking at the charts. All right, so let's get into this. Light crude, that's the first thing we're going to look at in here. We have been looking for a completion to this corrective period in the whole energy sector. I did a video yesterday that was on Tuesday where I looked at the whole energy sector. I looked at 25 different charts, light crude, XLE, and all of the four major subgroups and the stocks in there in the oil sector and the energy sector. So if you haven't seen that, I think it's going to be good to look at. So let's take a look here at light crude /CL. So the green area is the upside phasing, the yellow area is corrective, and red area, and like you see right here is the when we've had a breakdown and we're in a declining or bearish area. So the period right in here is what we're looking at, and we've had almost no correction, just barely getting under this 23.6%. And this says to me that this next rising phase is going to start soon. Now, I've had my finger on the trigger on buying oil and have been patient about that, and I'll show you why in a moment, even though I think we're about to enter a rising phase. And I've had some emails on that also. Isn't it time to start buying oil? And my answer is, yeah, maybe start to nibble. So here is what's been going on in here. We're in this area right over here, and you could see this ninth day, and I was a little concerned about it coming down 9 days in there in this phase, and that the rallies might not hold for now, and there might be a little better area in there to buy them. So you can see it had this big update right over here on some news about oil inventories, and this over here on some news about oil production. So that was kind of a whipsaw the last couple of days, and now I feel vindicated and holding off. I still think we're making a bottom, and I just wasn't convinced in there. Part of the reason that I wasn't convinced was I also look at intraday charts, and I had thought that the 2 hour chart in light crude was giving me a message in here that said not yet. So I kind of honored that, and I see that right in here. Here's my 2 hour chart. I don't share these 2 hour charts very often, and you can see there's even cycle rhythms in here that I look at. What bothered me was this right in here, that it seemed to me like there were another few days left in here before it was over, and that actually this 2 point rally we had yesterday would fail, and that we'd come down again and test that level or take it out before we got this upside move. And that really is what had me holding off in putting in a long side setup. So I think it was the right thing to do to hold off, and you can see the way it's acting. So for those of you that are waiting for us to put in those long side setups in oil, it just might be a few days before we see the right time for that to happen. And we're watching that carefully. So important to pay attention to as much of the analysis as we can, and at least this time it paid. It could have ran away and gone straight on the upside, but I had some doubts about that. So we also have some of the other products that didn't quite look complete to me also. So that could be a reason that I decided to hold off. Let's take a look here as we look at the other products in here, and also in natural gas, which is very interesting. I'll show you that in 1 second also. So here is the pattern in RB, which is the gasoline chart, and we're also in this final phase in here where we believe we're in this intermediate support zone. Note the 34-week moving average coming right across here at this 38% number right there. That's all support area, and you can see the way we have it drawn in. We're expecting a resumption on the upside sometime soon. So again, we're being a little bit patient in there, and let's bring this in right here, and you can see that we really expected a bottoming to be coming in right in here, right there. And this one kind of stalled up in here at the slim ribbon. It never turned into positive momentum yet, and is still really sloppy and turning over. So this might have all the way out over here, which is another, let's say, 6-8 trading sessions before that bottom is in place. So we're watching these shorter term products also to get a sense for this bottoming phase that we see that we're in right here, for a good bottom to come. Here is the heating oil /HO, and same pattern in here, as you can see, looking for this 23.6% support to hold, and that a bottom is due at this time, and still not a real sign of that bottom coming in. So we're not jumping on it yet. Here is one of the reasons that I looked at this also. Remember I said maybe another few days in oil. This one also has a few more days of time in here. So coming to this 89-day support, maybe it doesn't have a lot more on the downside. So maybe you chop around in here for a couple days before you make that bottom, and then you turn up on that cycle right over there. So we're looking for the bottom in here, and not really getting a good sign of it yet, so we're holding off and waiting for it. Now, natural gas is interesting. Natural gas got to a point where we thought it was ready to move up, another move. We put in a long side setup in there, and I know that some people actually made some money on that as it tried to move up, but then today it really started to act really sloppy, and we were concerned about that, and so we had a level in there that we thought would prove to us that the setup was not ready to work for any significant upside move, so we pulled that, and still have a little bit of concern in there about this the shape of this pattern in natural gas. So here we are. We'll look at the intermediate term on this weekly chart, and we're looking for a bottom to form, and this is a massively bullish chart that you're looking at in here. So you have this big rally that goes up like 95% of the time of this cycle right here, and then you go into the minor correction right over here. So when you get that, then the odds are high that there's going to be another move on the upside. We're still looking for this 307, 310 area on the upside right over there. But the question is, when is this little corrective area going to end? Now, we saw that potentially we were in this area right here where we could get a lift right there. And you could see we actually got it, and it got into this minor resistance area and failed. You can see that right over here. To us, that's a source of concern. When it got up here and made a rally today and then took out its low of the day out over here, that told us that whatever force moved it down from the minor resistance, it's still in play, and there's a potential. You see this cycle right in here that it could roll over. It could get into one of these patterns in here before it then takes off on the upside. So this looks like a much more complex corrective period in here than we had originally given it credit for, and we're watching this, the relative action to give us guidance. What do I mean by relative action? It's how it performs in a particular window. So this is a window of advance right here. You have 3 cycles pushing to the upside, and you could see how well it performed. Here's 3 cycles pushing to the downside, and you could see how poorly it performed. Here you go with 2 cycles pushing to the upside, and it's not performing well. So this is the window of relative performance, and it's not performing well at all. So what do? We pull our long side setup, and we just stand aside and let it speak to us again. We have 80 symbols in our active trading amount of symbols. We don't need to trade the ones that aren't really giving us the good signals. So if it doesn't work, we get out, and then we look for another time to get in there. So that's a look at natural gas and explaining how we thought it was the right time, and then the market telling us differently. It could happen that it moves up again and you don't have a real breakdown in here on the short term, and that happens sometimes. But we want to play the highest odds all of the time, and in this case, it's kind of telling us to lay back a little bit. You've just watched the opening of one of our member videos. We hope you've enjoyed that and you want to see the rest. We have 7 categories of videos for our members. FutureSpeak, where we look at 24 different futures contracts. Stock sectors, where we look at important setups that may be there in different stock groups, really some deep evaluation. Tools for tax, a multitude of studies that you could put on your charting platform. Trader psychology, we look at personal issues that may be getting in your way of success. Big picture analysis, where we do analysis of many markets looking at the longer term view. Style, strategy, and plan, where we look at many aspects of engaging in the markets as a trader. And IRA-MO, some longer term analysis for your IRAs. All of this you can have, our whole member library, just $33 a month. Where are you going to beat that? New videos 4 times a week. Go to our site, AskSlim.com, and click on membership. I think you'll like what you see.
Well, I'm going to the city and I'm gonna do a silly show.